Hello and welcome to Pro Trader Strategies market commentary for Tuesday, October the 2nd. I know you'll hear it in the background. It is pouring rain here. I also have the lights on giving me all kinds of crazy shadows. So you're going to have to bear with me today. All right. Anyway, my name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some of these different strategies that you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data across the pond. We got Japanese consumer confidence coming in at 43.4, in line with expectations there. And then we got Great Britain construction PMI, Purchasing Managers Index, anything above 50 expansion, 52.1, expected to be 52.8, just slightly under what we were expecting there. And then the European PPI, which is Producer Price Index, came in at 0.3%, expected to be 0.2%, and revised last month's number up from 0.4% to 0.7%. So a little bit of a revision there. We also have Quarles speaking right around now, and Powell speaking later on this afternoon, or actually later on this afternoon, sorry. And finally, we also have the total vehicle sales throughout the day. One thing we're seeing is Fiat Chrysler sales much better than expected. Ford, Nissan, and I believe Toyota were all on the negative side for vehicles, total vehicle sales. So keep your eyes out for that. As a matter of fact, Chrysler was beat on 10%, and I think like Ford and Toyota were a miss by about 10%. So that could be affecting some of the overall markets there as well, especially in the auto industry, or sector, I should say. Another thing to talk about, we're consistently seeing these economic data points come out good, expansion, but we're not seeing the robustness that we saw basically around this time last year. So that being said, I continue to say about these Fed governors that we need to slow down on the pace of increasing interest rates. We're above inflation. That is good. Therefore, I think we need to take a pause here and let everything shake out. We don't want to overdo it to the upside in these interest rates and slow the economy enough to a point where it starts pulling back. We need to keep that in mind as well. Crude oil futures, $75 a barrel. I just can't see this sustaining up here because of this economic data that we're starting to see with the overall economy pulling back a little bit. That isn't going to bode well for crude oil. Therefore, I think that crude oil needs to come back down into the 60 handle otherwise this is going to be a real tax on the economy and really start to slow things down even faster than what we would want. That being said, not really up on the day, but into that 75 handle, which I was not expecting it to blast through this 78 Fibonacci extension yesterday. Thought we'd see a little bit more resistance to that, but once it got towards the end of the day, we were above that. It was all out to the upside. Today, starting to see a little bit of weakness. Need confirmation, obviously, tomorrow. A confirmation settle below the 78 Fibonacci would keep my theory intact of it wanting to roll back over to where this point of control is, where the most time and volume has been spent, okay? Sorry about that, dogs. Trying to figure out what's going on. All right, gold futures blasting off $17 higher and back into that 1,200 psychological level. There's no support and resistance there, but we are building up a major node there in and around that 1,200 area, and that's because I've talked about it for so long now. That is the psychological level that the bulls are really going to try to defend today, making an effort to get that 1,200 handle back in the limelight. Bitcoin, I don't know. Bitcoin's at a point where I'm almost ready to pull this chart. Nothing to see here. Let's move along. Bonds moving higher today. I think maybe some of the rhetoric and things that I've been talking about with the economic data, and people are actually starting to catch on to this, that we aren't seeing the robustness that we were seeing last year, and we need to start slowing down this interest rate increase. A bit of that push higher today in bonds. They're only up a half a point on the day, but I would expect over the course of the next few weeks, a slow trudge higher in the bonds, which would indicate that they are less likely to continue to increase interest rates. All right, VIX coming